Hello and welcome back to the class. I just want to quickly comment on a setup that I noticed early this morning. I was going through the charts and looking for maybe a setup that will suit this strategy so that we can open a position in it. And I came across this AUD USD. And then I thought, why not take it? We can take it also and keep it in view as we monitor the progress of the trade. I want to explain what I saw that inspired my action. If you go to the monthly chart, you will see that the two EMAs are just the two EMAs, that's the 9 and 21 EMAs, just meet as if they are trying to cross, but the crossing has not happened yet. So you bear that in mind. And there was this break of structure I saw because you can see this recent green candle is higher than the highest structure you can see at your immediate left. So it means structure has been broken to the upside. There is need for retracement. Where is the retracement? Here it is. It has pulled back. It has pulled back to our EMAs. And we have these EMAs in place to guide us. So it has pulled back to the EMAs. Next, we drop to weekly chart and we still pay attention to the EMAs. We can see on the weekly, the cross is obvious. Like I told you, weekly chart represents 1 week of trading per candle. So each candle will trade for 5 days and it will give you 1 weekly candle. Just like in the monthly chart, one of the candlesticks you see on that time frame, no matter how little it is, represents a whole month of trading. So dropping down to the weekly chart, we can see there is a crossing here already. So it means uptrend is becoming established, but we cannot really be certain, even though in fact, if you ask me, I'm a bit certain, but just leave it at that, that we are not very certain until these our indicators begin to point and stack and look upward. When they begin to stack upwards, without any curve to them, then you know the uptrend is fully established. For now, we say that it's a developing trend. So having seen that, price traded up to the 21 period EMA. Today I keep calling 21/12. I don't know why. So price came down to the 21 EMA on the weekly chart. Having seen that, it gave me another assurance that okay, I should keep going down and see what I will come across. But on dropping to the daily, I now notice that due to that very deep retracement, this drawback here, this the pullback, due to that very deep pullback, it caused the EMAs to cross. You know, it's 29 and 21. So the heavier one crossed above the lighter one, showing as if this price is about to go downwards. But for me, with using this strategy and given what I've seen at the monthly time frame, I am of the bias that this price will be moving higher. So I'm expecting higher prices. So I will just move to um the uh 4-hour time frame and see what I have there. And because I have this bias that price may go higher, I will stick to that bias until I see a reason why I be with that bias anymore, and then I will drop it and do what the market suggests. But for now, I believe we have a developing trend, and so price is trying to recover from the downtrend. So very soon I want to see price close above this 9 EMA. If it closes above 9 it will cause the EMAs to start trying to cross back upwards, so that the lighter one will be up and the heavier one will now be down, showing an uptrend. So let's drop to the 4-hour time frame, which we have always used as our entry trigger What we can see in the 4 hourly chart is that, you know, that downtrend has already in fact begun to turn into uptrend, just like what we saw on the weekly and monthly. So you can see 4 hour chart is already aligning with weekly and monthly, but daily is still showing downtrend. So what you do, you open your position if you are satisfied with what you are seeing, but bear in mind that because it is a developing trend, there may be pullbacks. So be ready to withstand that while all the time frames align with one another. So as it is now, we can see on the 4 hourly there is a higher low here. We've not been discussing them. All we've been saying is about uh lines of the EMA and then our OBV and MFI indicators. Okay, let's leave it at that. They're about to cross and you can see it here, and price is showing momentum to the upside, which is obvious when we look at our OBV indicator and our MFI indicator. Look at where they bottom. Look at this very vertical black line. Look at it's pointing to this V shape here. Look at it. Price bottom and it's a higher high, it's a higher low for the MFI, and it's a perfect V bottom for the OBV. And then the OBV has also indicated a higher low to this side, just like the MFI also. So they are almost doing the same thing. They are agreeing with what price is doing. So for me, I'm happy that this setup is forming before my eyes. I will just be looking at retracements to the what? To the After crossing of the indicators, I will look for retracement to the preferably to the 21 period EMA. So let's see uh what's happening in the 1 hour chart. So in the 1 hour chart, we can see here that price retraced back even to the 21 EMA and then quickly withdrew back up. So this supposed to give us an entry trigger. Even though 4 hourly is what we usually use for taking our trades, we can see that for me, this is enough for me to take this trade. The fact that price came and stretched even past the 21 period EMA is showing that it has really tested the area below that indicator so that it will clear orders. I can just open my trade right from the 4 hourly, but it is clearer on the hourly chart. You can see here price has traded uh to the 21 EMA and even slightly broke it, and it started to go up but didn't break that previous high. It still retested the EMA again here, started to go up, still retested the EMA, but yeah, here, and even came to the 21 EMA up to three time retesting. This one, two, three, four retracements we have already. So for me, this is all good. I can just hop into this trade. I have been in the trade since early this morning. I'm just going through to explain why I took this trade, and so we can see the price is recovering gradually. We are getting into profit gradually. So let's check what is happening with our trade lineup. You can see the page where you have our running trades. Our second entry in palladium is well in profit, which is the 0.3 lot size. We already had our 0.1 lot size since yesterday it was opened, and we saw that the price target is really it has a long way to go up. So I decided to open another position, and that's why we have two palladium positions, and we can see it's up, it's just pushing towards our take profit, which is this red line you can see here. Even if I'm not here, once price trades to that region, it will take us out of the trade in profit, which is what we are hoping for. Now, having seen that, we are now displaying our profit page, our trades page. We can see all the trades are in profit. The AUD USD is recovering. You can see the lot size open and it's already in profit. It used to be in loss. Actually, I have a page of the trades. When I took them, they were all in red. So now they are recovering and all of them have turned back to be in blue. So, and what we want to see on our dashboards in this is the blue color. We don't want to see the red color. The red color means money is leaving our pocket, but when we see the blue ones, it means what? We are getting money into our pocket. So money is pumping into our pocket here. We can see our Bitcoin is also doing well. The second entry has been open. It has been in loss since we entered. We just entered early. We knew that it would continue. We expected, not we knew. Nobody knows what's happening in the market, but we expected it will actually draw back a bit before it continues in its upper trajectory. Now it has shown sign of recovery, and we thank God it's also in profit. And the other one is so what we have here, we have Bitcoin, we have AUDSD, and we have two positions in Palladium. So they are all playing in our favor by God's grace. We thank God for everything. Let's quickly check our live account. The live account is also doing well. Live account is also moving gradually. I took this AUD USD trade knowing that AUD USD is a fresh signal and it has a long way to go. So I can decide to leave this AUD USD trade open for as long as possible, because a trade signal seen on the monthly can mean that we in the next 3 months we continue to buy AUD USD from where I saw it. So I'm going to just keep that trade open. Then the NZD JPY trade will also remain open, even though it has been ranging. I don't know, there is a tight range holding it, and we'll see if it breaks out of that range. Then it should be open for as long as possible, at least, or let's just say to this high, to the high here where it is now it is 91.024. We will close it when it is 98.655. That is if I'm able to hold. It's a small account, so once I see profit, I try to close it and then reopen again. But even if you open it, I mean, if you leave it open, just continue trying to trade other things. The fact that you are in profit will not allow your margin percent to drop, so you can open. And then even the USD JPY, I have this underlying narrative that shows that this price may continue surging higher until it gets to, let me check the monthly, at least this high here. So this high where we have the 161.883 level. So I'm also going to keep that trade under observation, but I will close whenever I feel happy with the profit, and then wait for another retracement again and take the trade again a second time. So this is what I'll be doing to my positions. Since that one, like I said, is a real account, it's a baby, we are only using this strategy in it so that we can continue fine-tuning and honing in on our strategy until we get very perfect in our entries. And in this forex market, you find that entries are usually the problem. Entries are usually the problem. They allow you, they expose you to so much drawdown that you run out of the market, and then you find price making a reverse and going in your direction. We want to try and minimize that. That's why I've been in research and I came up with this strategy. This strategy has allowed me to enter the market as early as possible, while I am exposed to as little risk as possible, because my stop losses are usually as tight as possible, especially when the trade is taking on a 5 minute time frame. I pray the strategy becomes more and more clearer as you continue to follow the trades. See you in the next class. Thank you.